So you're thinking about investing in property. Perhaps you already own your home and you're thinking of buying a second property as an investment. Or you could be completely new to the property market and wanting to start as an investor. We're taking it back to basics for you and drilling down on everything you need to know about investing in property. In this video, we are going to talk about investing in property for beginners. If you are interested, so stay tuned into the video. Definitely you will find some value. Let's move on towards the topic. Investing in property involves buying real estate with the goal of generating income and building wealth. But why choose to invest in property over other types of investments? Let's take a look. But before moving forward, if you are interested in investment or passive income, so make sure you can subscribe to my channel because I regularly upload this type of well-researched videos for you onto my channel. Let's moving on towards the topic. Why invest in property? When it comes to building wealth, there are a few investment options you can consider, including property, shares, and even cryptocurrency. Some people choose to focus on one form of investment, while others prefer to diversify their portfolio with different forms of investments. There are many reasons why investing in property continues to be a popular choice for Australian investors. Research from CoreLogic shows that property has seen an annual growth rate of 6.8% for houses and 5.9% for apartments over the past 25 years to 2018. Since 1993, median house and unit values have increased by 412% and 316% respectively, providing Australian homeowners with a significant wealth boost. Considered to be a relatively stable and lower-risk investment, purchasing an investment property also comes with a number of potential benefits, including increasing in value over time, not guaranteed but historically common, income from renting the property to tenants, tax benefits, investing in bricks and mortar. A tangible asset is sometimes seen as more reliable and desirable, traditionally less volatile than some other investments. Opportunity to increase the value of your investment through renovations and works on the property. Are you still watching my video? So definitely you will like my other videos as well. If you are interested in stock market or investing and you don't subscribe to my channel yet, so subscribe right now because I upload these types of videos regularly. Now move on towards the topic. Property investment strategies. For property investors, there are three key areas of potential: capital growth, rental income, and tax benefits. When thinking about your investment strategy, it's important to understand which of these elements, either individually or as a combination, are most important for you. Capital growth. Capital growth is the increase in value of your investment property over time, calculated by finding the difference between the current market value and the purchase price. Rental yield and income. As an investor, you are likely to rent out your property to tenants, offering an ongoing income stream. For some investors, this is the main goal: to comfortably cover all costs and provide a passive income stream. Tax benefits. The third factor that needs to be considered by any investor is tax implications. As tax rules change constantly and every individual has a different financial position, we recommend you seek expert advice tailored to your situation. Finding the right property. There are many factors that will influence your search for the ideal investment property, and it's important to do your research. Investing in property is very different to buying a home to live in. While buying a home can be an emotionally driven decision based on your personal tastes and preferences, investing is generally more rational and focused on expected returns. When it comes to choosing a location for your investment property, you really need to do your homework. The location you decide on could potentially impact your capital growth and rental yield, so it's important to look at up-to-date market data for the latest trends and insights. Most investors also consider a range of elements when choosing a location or suburb, including growth areas, future developments, lifestyle amenities, as well as proximity to schools, transport, and hospitals. Once you've decided on a location, it's a good idea to compare different properties in the area, making note of the rental prices and potential rental yield. You will also need to decide on the type of property like apartments, houses, or building your own. Your budget will play a big part in deciding on the type of property you can afford to buy. And on the flip side, the type of property will have an impact on what your rental income and yield looks like. After discussing investment strategies or finding the right property, now it's time to give you some tips for investing in property. But before moving forward, if you like my work, so give a big thumbs up to the video and subscribe to my channel. Let's move on towards the topic. Tips for investing in property. Investing in property can seem overwhelming, especially if it's your first time. That's why we've done the heavy lifting for you. We want to give you all the help you need to make a well-informed decision. Here's our top tips for first-time property investors. Be clear on your goals. Why property? Which investment strategy will you choose? What are your short-term and long-term goals? Answering these questions will help you decide if investing in property is the right move for you. Make sure you consider the realities and complexities of property investment, not just the potential benefits. Decide on the level of risk you're comfortable with in case of a possible drop in market value or interest rate increase. Do your research and do the maths. This one is really important. There's a lot to consider when deciding on a property to purchase, from choosing an apartment or a house, to picking a suitable suburb or location, and working out how much you can afford to borrow. Then research the property's potential for capital growth, rental income, and ongoing costs. These figures will help you make an informed decision. For example, you'll need to make sure you can cover your loan repayments, plus other costs like council rates, strata, and property maintenance, while still maintaining your lifestyle and current home. Don't set and forget. Being proactive is key. Property is not a set and forget type of investment. Review your loan every year or two to make sure you're getting the best possible deal from your lender. Staying across your rental income and expenses is a must. You need to keep tabs on how your investment is tracking, whether the property is positively or negatively geared, and whether your investment strategy is still aligning to your goals. Get professional help. It's definitely possible to manage an investment property yourself, but in some cases, it might be easier and cheaper in the long run to bring in the professionals. Managing tenants can be a tricky and time-consuming task, so you may find that engaging an agent to take care of this for you is a better option. When it comes to tax time, it might pay off to have a professional accountant to look over the numbers for you. They may be able to find additional deductions for you and can save you a lot of hassle if you somehow lodge an incorrect tax return. I hope now you understand how you can invest in property as a beginner. So that's it for today. And if you will find my video valuable, so don't forget to like and subscribe. We will meet again with another interesting topic. Till then, stay safe and stay happy.